Folks, welcome to the Midweek Roundtable. My name is 𝗧𝗴𝗀, and I'm the Senior Strategist with 𝗧𝗴𝗀. Today we have my co-host. The usual troublemaking team is here, 𝗧𝗴𝗀. He is the author and the publisher of Joy of the Trade. Now, before we get too far ahead of ourselves, if you guys have questions, if you want to reach out to Jeff, he won't bite. It's Jeff@joyofthetrade.com. It's Jeff@joyofthetrade.com. My email is support@marketgeeks.com. It'll get directly to me that way. Jeff, how are you today?
I'm just living another day in paradise. Roger, how are you?
I'm doing wonderful. I could tell by your backyard, the weather's just it's beautiful there right now.
Yeah.
I love the sunroom, the Florida room as we'd like to call it. So can you imagine? I looked at the clock today, or the calendar, and I realized that we are already halfway through September.
Yeah, I mean,
I'm going to ask you where did September go? Right?
Where did the last year and a half? I know where the last year and a half went. It went in quarantine.
Right. Amazing, right? Amazing. I mean, I was just eating Labor Day, having my Labor Day celebration, September 2nd. Now all of a sudden, time just, and especially if you have kids like you and I both do, it just gets away from us. It really gets away from us. So what are you thinking of the market? I mean, we had the CPI yesterday. We have the PPI today coming out, or it actually should already be out. We've been talking. I haven't really been looking at the market last hour. But what do you make of all of this?
We've been having bearish moves. So we had this, Jay Powell and these guys, they're looking for any excuse to not raise interest rates or stop flooding the market with capital. That's a given. We know this, right? Like, this is just a fact at this point. These guys don't care about inflation. They don't care about the middle class consumer's plight. They're not really interested in employment. That's just all bullshit. They care about the stock market. They care about stock prices, in my opinion. And they're looking for excuses to keep the gravy train running. They're looking for any excuse, and that's fine. We know the game. So as long as we know the game, we can adapt our game, right? And they got the CPI print, which was in line, but the core CPI came super soft. It was 0.1. This was just yesterday. And on that, you would expect stocks to rip because the gravy train is going to keep rolling, but they did not. They did not. And so, like, trading 101, anytime a news event does something and the price action is going in the opposite direction, and you've been running for a while in the direction that you expect it to keep going, pay close attention, because it's going to be difficult to get positive catalysts that are not purely technical, like oversold conditions, to get the market to run overall.
I could not agree with you more. And it's really interesting because it's interesting how the bond market is, and in my opinion, I think you've just really put it all together really, really well.
Thank you.
And I think right now, and I've been talking about this for quite some time, with momentum levels narrowing down. The Dow is now below the 50-day moving average.
Yeah.
Things are just not as pretty as they were. No. But the interesting thing is, if you looked at internals, they were really talking about this for quite some time.
Yeah.
Quite some time. What do you think about it? I'll give you my opinion. I know we've been talking about the Delta variant for quite some time, and now you have this new 𝗧 or 𝗧, whatever. I can't even pronounce it right. Variable coming out. This COVID is running everybody amok. But my question to you is this: are you starting to see the market assimilate more of it into its value, and not be afraid of it as much?
I feel like COVID is kind of becoming like a secondary. It's a secondary market story. It's still the first story on the headline news. It's still the first story when you talk to your friends. It's still the first story in the actual real economy. But as far as the stock market's concerned, unless something like cataclysmic happens and we have like another real huge Delta surge in the Northeast in the winter, which I actually expect to happen, by the way, but that's neither here nor there. That's going to be a seasonal thing. The market's going to kind of just like brush us. You're not going to see, like, we've had like this market rotation from COVID stay home plays in and out. It's been a back and forth theme. And I think that's going to kind of die down as far as like people like bouncing from owning airline stocks to owning Peloton. I think that's becoming less and less of a thing.
I agree with you. Also, I noticed I was paying attention to some, and actually this is an interesting thing to talk about. I've been meaning to mention to you. So I've been about 2-3 weeks ago, when things were really looking like they can go either way. Now things look like they can go a little bit better. but it looks like it might be the worst is behind us. The death rate is starting to cool off. We're getting past this. In the South,
which is where the outbreak was. Yeah,
right. Alabama had it was bad. It was really bad for a while. But it looks like the worst could be behind us, and I have my fingers and toes crossed, just about everything crossed.
Yeah.
But here's the thing: last year when this happened, when we saw this big spike, we saw a lot of consumer staple stocks go up. If you recall. Yeah. I'm not even going to talk about the initial toilet paper and that whole thing. But after that, remember like Campbell's soup, canned soups, things
Kraft. Yeah.
Exactly. Right. Not this time. Not at all. So interestingly, the group of stocks that you and I talked about, the airline stocks, the hotel stocks, they really started going for that next round down. And we've got but not the emergency things. I mean, people don't have to go to Las Vegas, but they have to eat their craft. You know what I'm saying? And they need to have their. People are going to keep eating their Campbell soup. 52-week lows breaking down. So it doesn't look like we had that. Notice we didn't have any of the major emergency things. People had plenty of toilet paper. If you think about it, over the last 2 months, I haven't really seen much of that
hoarding mentality.
Yeah. The oh my God, what's going to happen to the world? We're all going to come apart.
Well, we have real before it was like hypothetical, like imaginary problems we created. Like, oh, there might not be toilet paper, so let's stock up on it. Now we have actual problems. Like, oh my God, I can't get a car, or I can't get a washing machine, or I can't get a contractor to fix something. Like, we have real disruptions in the economy because of supply chain constraints. Because you talk about this a lot. The chip thing isn't going to rectify itself anytime soon. There's going to be pricing pressure. Semiconductor companies are going to be relatively bulletproof for a while until they get crazy overvalued. So you and I have been talking about obvious low-hanging fruit. I don't know how much lower some of those stocks can go. I don't know how much higher some of, the crazy big tech stocks can go. I feel like they're starting to crack a little bit, but I do know that there's inflationary pressure on things like oil. I do know that basic materials have a bid and have a dislocation. I do know that semiconductors are a place you want to be long, not short in technology. So I'm focusing on things that I can wrap my mind around and trying to not be Nostradamus in some of these other issues, because nobody really knows what the world's going to look like. We don't know. We don't know.
Again, it all goes down to the Warren Buffett's most basic principle: less conditions. The less conditions you have towards something, the more direct A/B cause and effect you have. It's hard to predict 3, 4, 5, 7 steps into the future. Yeah. It's not easy to do that. Why not just hit the low-hanging fruit? Right? And I try to tell my traders that. See, people try to make it complicated. They try to play a game. Well, if this happens, then that will happen. Then this will happen. Forget all that. Go with right now. What's right in front of your face?
What's happening right now?
What's
probably going to happen in the next 12 hours? It's hard to predict 12 hours. I've been in the business of predicting 24-hour cycles for 20 years. It's a very difficult thing, but you can actually get a little bit of a mathematical edge on that. Whereas 6 months from now, there's too many dynamics. It's kind of like the weather. Is the weather accurate usually within 6 hours? It can be, not always, but it's more accurate within 6 hours than 30 days from now.
Yes, of
course.
And
the stock market is kind of the same. It's kind of the same.
Right.
But people don't view it that way. They actually view it in the opposite way. They view it like the future is much more known and tomorrow is an unknown. No. Tomorrow, we kind of know what more or less it's going to be like. We have some ground rules unless something totally nuts happens. But 6 months from now, we can be dealing with an entirely new ballgame. There could be another variant of this thing that, God forbid, and I'm talking risks here. There could be another variant of this thing that's much more lethal. We don't know. And then really locked down. We don't know. So you have to operate with that kind of 6 months from now, visibility is very difficult.
I agree with you 100%. Now, I want to talk about a topic that you've been talking about a lot, and that's China.
Yeah, let's go.
Talk to me. Give me your, and obviously that's the low-hanging fruit. Give me your opinion.
This week, they came out and they said, you know what, guys? And so a big profit center in China's domestic economy, not even internationally, domestically, is gambling. The Chinese culturally, and I know this because I'm a poker player, the Chinese culturally like to gamble. They like to gamble, the Chinese people. Asians in general are embrace gambling and speculation as a pastime. It's cultural.
Big time.
Right? And so Macau, which is the only legal gambling city in the entire country of China, billions of people, Macau, which has dwarfed Las Vegas in terms of revenue, has been a hotbed of gambling in China and Asia. And so this week, the Chinese Communist Party, and I've been saying this, they're acting unilaterally without any rhyme or reason, unpredictably, which investors hate, and coming out and making new rules. And so they came out and they said, new rule, guys. Too many people are, and it's been the same thing. Too many people are gambling in Macau. There's too many casinos. It's not under their control. We're going to evaluate whether this is being properly organized, controlled. So they're going to review. They're going to go through a 45-day process, Roger, of reviewing Wynn, MGM, Las Vegas Sands, their licenses, their ability to generate money, which is like 80% of all these companies' revenues right now. In Macau, they're going to review whether they give them a license to do what they've been doing. So, like, do you want to be an investor in things where guys can just wake up in the morning and be like, "Oh, we don't like what you do, and you can't do it anymore." I don't like that.
No, it's like living under a slippery slippery rug. Nobody likes that. No, it's laughable. I mean, from a business perspective, that's laughable. How do you run a business with those conditions?
I mean, do you ask a woman to marry you that like one day is like I like you and the next day I hate you? You probably don't. Like, you got to be pretty convinced that this woman's going to be by your side for a long till death do you part. And long-term investing is kind of the same, right? Like, do you want these guys to wake up, look over, roll over at you, look at you?
I'm sorry, man, you're cracking me up. That's too funny.
And then say, they just roll over one morning, they look at you in bed and they're like, we're done. This is how you make money. Like, how is Wynn going to make money? So I've been ahead of this train. You always ask me, give me a money link.
You've been ahead of this every step of the way.
I have a swing trade short before this news came out in MGM, the casino stock, for two reasons: because of exposure to China and because of brick and mortar casinos. And I have a long in DraftKings, which is an online sports betting company with very little exposure to China, that's exploding in use because sports betting is being proliferated through the United States legally. So this is how my mind works, just to give like our viewers out there,
of course, perspective,
what we're looking at.
Yeah, and by the way, just while you're doing this, I just want, I use the scanned relative. I gotta show you this, Jeff. You're gonna love this. I'm gonna share my screen just for 1 minute. I hope you're okay with that, and then I'll put it back to normal. Yeah. You gotta see this. You got to see this. So you're looking at my CSI scan right now. This is organized from. This is the strength level. This is the strongest stocks. Yeah. This is the weakest stocks, right?
Yeah.
So what are my two weakest stocks?
Las Vegas and Wynn.
This is folks at home. This is totally unscripted. It's just Jeff was talking about. I was like, I wonder what my CSI scan. The two.
So the takeaway I want people to have also is like, these dudes aren't done yet. It's not everybody, and so everybody's sitting here and they're trying to say, investors being investors are trying to say, well, they want to just like crush Alibaba, or they don't like Jack Ma. It's a philosophical thing. They want control. They're against out of control capitalism at this point. And as an investor, you want to be on the side of exploding capitalism. That's how you make money.
I couldn't agree with you more. And I think this trade is a great trade. And folks at home, as you just saw, the weakest two stocks are casino stocks. That's not a coincidence. That's not a coincidence. Because remember, my scanner looks at 6 month, 3 month, and 1 month, and then averages them out. So this is,
we're looking at think of it like you're looking at it like you're running a race, and we're trying to not jump over like 12-foot hurdles to make money. We want to jump over like these little puddles that look like pretty obvious, like that it's going to stay the same way. It's hard enough as it is. Will the Chinese Communist Party, like, all of a sudden, find a different, wake up, like stop doing all this and say, we're sorry, we did this all wrong? Probably not. I'd say like 95% not going to happen.
No, it's not going to happen. Now, let me take this one step further, kind of like a side movement from here. I'll move away from China, but not too far. Let's talk about airlines, and then move from airlines into energy, because the two are very. What are you thinking about that? We haven't talked about airline stocks in a while. We can also.
I'm bearish on airline. I'm bearish on travel, and I'm bullish on energy. And that's listen. After the summer, these guys were like, everybody's going to go back into business traveling. Nobody's going back into business traveling. It's still the same thing. If you get people to come to one event a year that used to do like 6 events a year, it's kind of a miracle. And so They don't have pricing pressure. They don't have pricing power, airlines, with anyone other than business travelers. And that's their profit. That's their profit zone. Those are their sweet spot customers that pay whatever to travel because they have to be in a certain city through certain days. That's how they make money. So right now, everything they're doing is at a net negative. They're running flights from Miami to New York City 150 times a day at a loss.
At a loss, yeah. Well, let me put a little more salt on the wound here. Just yesterday, Morgan Stanley comes out with their with their recommendations, and they're talking about a huge. There's this, and don't you know what? I could probably find the name of the company right here. Hold on, this is actually pretty interesting stuff. They were talking about different type of stocks breaking down, and they were talking about the catalysts that were around, and they were talking about a company, a airline company. It was a jet line company. Hold on, here it is. I found this. This is very, very interesting. So the name of the company is KNX, and they're the largest freight. And they're saying that the biggest freight companies right now are also, because of the airlines, they're seeing a slowdown as well. So because a lot of these companies, they do freight, but get this. This is where the cool part is. Textron, this is the company, TXT. Yeah. This is the business jets. They do small business jets. Yeah. They're saying that people don't want to fly in these commercial planes like the ones like and they're hiring these jets, and these jets are going to have a huge sweet spot. That they use the word sweet spot for the next 6 to 9 months, because so it really confirms what you're saying. You know, that people are like, these executives are like, no, forget business class, forget first class. If you can't get me a private jet, I'm done. So it just confirms what you're saying. Yeah. And Morgan knows. Morgan knows. Morgan has they have one of the best 3 research departments. I think Prudential, Goldman, and Prudential. A lot of people don't realize Prudential has a lot of really good commodity related research.
They have great technical analysts.
Yeah. Well, yeah, because they started Jack Schwager. Remember, he was a technical analyst.
𝗧𝗶𝗺𝗲,
right?
I think he's gone. I think he left.
It's been a while. It's been a while. Yeah, but you're absolutely right. You're absolutely right. Yeah. So let me tell you my opinion. So I'm glad that you have this opinion on energy. I'm also very bullish on energy long term. I think natural gas is going to slow down a little bit, but I think crude is going to start picking up again. I think the low hanging fruit right now, Jeff, the real low hanging fruit is in the healthcare sector.
That's interesting. I like that.
I think we're going to see, I think the Democrats, and again, this is not a political discussion. I think the Democrats are going to try and put more money into healthcare over the next 6 to 9 months.
Yeah, I agree.
And we're seeing a lot of private hospitals and a lot of money coming in from the public to the private sector in there. HMOs, things like that are getting getting a lot of, and again,
I had a buddy. It's interesting you say that, not to interrupt you, but I had a buddy like pitch me like investing in some sort of private ambulance business. Like, people don't want to deal with like normal ambulances and have some dough. They do everything for you. Like, they'll come and do it like, like doctors, paramedics that are working like privately and like take care of you in your house. Like, that's a big thing too now. That's exploding.
Major growth industry. That's a major growth industry, and I think that's only going to explode. So I'm looking at HMOs right now. I'm looking at anything relating to medical equipment, medical supplies.
It's defensive too. I like that, because you're going to have to find some defensive stuff, and it's not stretched either. There's opportunity.
No, it's not. So I'm looking at that. I'm also looking at specialty REITs again, because the markets are very neutral. I'm looking at, as a matter of fact, let me tell you a couple of REITs that I'm looking at. I am looking at, there's this one that looked really, really good this morning that I was talking to people about, and that was just flying off the charts. Let me give you that one, because there's some good opportunities here. Here it is. 1 second. I should have prepared this ahead of time, but I'd rather give it to you now than give it to you later. Here it is. EPRT, Essential Property Realty Trust. I think that one's going to see some upside over the next over the near term. I think the entire real estate market, the entire REIT market, and also carbon ETFs. Carbon ETFs are going to see some love.
Oh yeah,
so
carbon credits is a big thing.
Yeah. So those are the two big sectors that I'm looking at. What do you think about real estate before I let you go? I got two topics, real estate and crypto, and I want to talk about both.
Okay. Like residential, commercial?
Well, both. I want to, because I'm starting to see a shift from commercial to residential. Really.
I'm bullish on residential. We don't have enough inventory. We still have the same low, cheap money is going to stay there for a long time. People have money and they want to spend it on living somewhere. And businesses are shifting the use of their property from commercial use to residential. For instance, like buildings that were built in Miami to house like like office space and stuff are turning into lofts. Like people are renting these because they're in great locations and people want to walk around and have cool bars and restaurants and shopping and not have to drive around so much. So like I have like this like futuristic perspective of New York City that has still like 25% attendance rate of, physical employees. I think a lot of this stuff is going to have to be repurposed towards lifestyle, towards living, rather than like commercial office use per se.
So what you're seeing is a lot more commercial properties being turned into mixed use properties.
Mixed use, I guess, would be a good way to put
it. That's been really trending in Los Angeles over the last decade.
Yeah.
A company called 𝗂𝗓𝗡 that specializes in building multifamily and mixed use. Because before on main streets you would never see apartments in LA. You would see only businesses.
And people ask about the bubble, right? Like the residential bubble. And I say this, the difference between now and the bubble we had in 2008 that led to the great financial, or 2007 that led to the great financial crisis is this bubble is not being funded on bad loans to unqualified people. You have BlackRock buying entire neighborhoods full cash. You have people buying houses with 50% down payments. It's not like people are signing no background check, no employment, no income requirements, and taking bad loans out and fueling this thing. This is an arbitrage that people with money are doing to get yield, because you can't. There's a thirst and there's a hunger for yield, and this is another aspect that the Fed created. You can't get paid money owning treasuries. Corporate bonds are also not paying you based on the risk of the corporate debt, but you can still buy something and rent it out and create a yield through that positive carry. And so people are doing that. And as long as that arbitrage exists, as long as rates are low and everything else, and you can still get yield renting out to people to live places, it's going to keep going.
I agree. And I think we're going to see another major run up because of the fear of interest rates. I think the Fed is definitely going to take some action. And obviously rates are still going to be low. But a lot of people are thinking to themselves, hey, and I have a really good friends of ours that moved here several years ago. They just bought a condo. And they're like, look, we know we're buying at the highest level, but if interest rates go up, most people don't buy with cash. So they're thinking, look, if interest rates go up 2 basis points, then we're going
to I already have a cheap rate locked in.
Exactly. So I think that's going to continue over the near term. I think that's going to continue over the next 6 to 9 months.
I don't think it doesn't feel as precarious. Now it's getting wild in certain areas, but Florida, like where we're at, it's getting wild.
Yeah.
But it's different. It's still people buying it's
fun. Are you seeing any cool off in your neck of the woods at all?
It's going even more berserko. It's so wild. It's like up 100 and something percent, and since COVID. Before it was up like 30%. Now it's in the triple digits. And it's like, I'm at the point now where I'm like, should I move to Omaha? I mean, Omaha sounds cool, like a nice place. Like I'm a pretty simple man. Give me some green trees, some nice walking trails, some decent golf, and an okay steakhouse, and I'll live there. My wife, maybe not so much, but I think that way. And so I'm on the internet and I'm like, Miami, $700 a square foot. What's going on over here? Where can I go over there?
Yeah.
You know, I'm
Yeah.
starting to like, what would be the price? And I'm like, you know, like, fortunately, we're settled in. We have night, like the kids
Sure.
are happy and everybody's
Plus your
happy.
family's there.
But a lot of people got to be asking themselves this
A
stuff.
lot of people.
A lot of people got to be saying like, yeah, yours, take it.
Yeah, a lot of people, especially people who can now work from wherever they want, and they have the freedom, and you know they can buy a property for 200,000 instead of 800,000. It's a big.
So you have this arbitrage, you have this rate arbitrage, but then you also have like expensive cities like Los Angeles and San Francisco and London and New York, and you have people moving to these I guess you could call them second tier cities like Miami, Austin, which are now becoming first tier cities. And they're looking at this price discovery and they're saying, oh my God, my crap hole in you know, like in whatever, in Cedo, I don't even know California, but you know what I'm saying? In like a nice part of California, in a nice part of Los Angeles, they're selling 3.2s for $2.5 million, 1,500 square feet.
Yes.
And they're coming to Miami and they're going, well, I'll pay 1.2 million for that. That has a pool. And it's like, but it used to be like 600. And they're like, I'll pay 1.2.
When I came here to North Florida, now prices have doubled. But when I came here to North Florida and I saw my house, I was like, this is a down payment on a house. This is 7 times less. I mean, it was like, this is a no-brainer.
Right.
So yeah, it has been a crazy, crazy time. Look, before I let you go, one last thing. I know a lot of people right now are interested in cryptos. I know you and I are very, you know, we're very cautious that we treat cryptos like penny stocks, very, very speculative. Any updates? Anything you want to tell us about cryptos before we conclude today?
Well, they're under regulation, but you know, they are. Listen, the bid in crypto is multifaceted, and I'm a small investor. I think there is a place for you to own crypto in your portfolio, but I'm not like off the reservation buying JPEGs of like crypto. I don't understand like which NFT should be worth what, but I know their value there. I don't think it is where it's going to be, but I think there's a place in everybody's, you know, investment strategy to have a little bit of crypto. And my main reason is, you know, the central banks of the world are going to keep crushing fiat currency. They're on a warpath to keep stocks, you know, to keep the stimulus going, to keep the sugar high going, to keep reality off on the sideline, and to keep people distracted, frankly. And as long as they keep doing that, would you rather own like some third world country's peso or whatever, dinar, or would you rather own a Bitcoin?
Right.
And I think the answer is a Bitcoin. I think, and that's why you have $2 trillion in cryptocurrencies now, because it's not just an American game, it's a global game. And as bad as our central bank is, and nefarious in their activities versus the common man, they're infinitely worse than a lot of other countries. And so like there are places where you don't know if you can afford in 2 weeks, based on what you're earning, to get milk and eggs and stuff that your family needs to live. So yeah, I would own Bitcoin instead of owning my local currency, which is on like a constant road to zero.
Appreciate that response, Jeff. And I agree with you 100%. And I think you are 100% on the money. 100% on the money. The only thing I would caution people at home is be very, very careful and only have very little exposure, because it's a very specific asset.
Listen, if you can't tolerate a 25% swing in 12 hours, then you should not be, then you're too big. That's what I always say. Like when I was training young traders, I was like, can you eat lunch? And they're like, oh no, I can't even breathe right now. Okay, you're too big.
Right.
Take your risk down a little bit. Your size is too big in this trade. Your anxiety is too high. It's because your risk is too big. You got to be in positions that you can stay fresh, you can stay sharp and not super nervous and not emotional. And if you're too big in crypto and those swings are making you like not be able to sleep or eat, you're too big. You have too much you have too much of your money involved in it. I have just enough where I look at it and I go, damn, I'm getting smoked this morning. Or I'm like, wow, that's cool. Like maybe I should go buy this watch or something, you know, like just enough. But gotcha. I'm not like, oh my gosh, we're going to have to change our lifestyle based on the moves in crypto.
Totally understood. Yeah. Jeff, another wonderful session. We went all the way today. I really appreciate your time. Folks at home, if you want to reach out to Jeff Zenaneri, please do. It's jeff@joyofthetrade.com. My email is support@marketgeeks.com. Please check out Jeff's services. He's got a couple of really good ones. Go to joyofthetrade.com or go to wealthpress.com and look up Jeff Zenaneri. Jeff, thank you so much, and I will see you next week. Bye.
Take it easy.
Bye, buddy. Bye. Take care.
Bye-bye.